Hi, I'm Patrick Reid from the Adamis Principle. I've got some charts and some headlines for you today. First up, the repercussions of the OPEC meeting. Not so sure about that. But dollar CAD has finally broken the mid-Bollinger Band, no matter what. Just in the broad sense, we have a dollar weaker risk on, right? And interestingly, the stocks tend to follow EM, and then the yen crosses. We didn't really have this. We had stocks leading the charge. EM dollar now getting a bit softer. So with that in mind, let's jump into euro dollar. As you can see, the long-term trend on the daily is still lower. We did get some big spikes and then crashing lows. The spike was the dollar funding issue, and that being bled in now. We're sort of toying around that 108.66, but for me, the 109.10, 109.20 is around that mid-Bollinger Band. The longer we stay below that band, that mid-Bollinger Band, the better for bears. And we could potentially test new lows of 106.12, which is the lower trend line. Next chart. Dollar yen going nowhere fast. All of the yen crosses are being moved by core, not dollar yen. Just something to note. This is due to a weaker dollar. Now, as with anything, this will not last. Interestingly as well, after the after the oil spike, stocks rallied, moving along with dollar yen. So that was just an interesting move for me. But at the moment, it's pretty much lackluster for dollar yen. Next chart. Our old friend cable. This is interesting. I put some arrows on here just to highlight the importance of the mid-Bollinger Band. We quite like it at Adamis Principle. As with everything, we don't fall in love with levels, we fall in like, and they can be quite cool mistresses. So just be careful of that. But at the moment, this mid-Bollinger Band is proving to be exceptionally good support. Top side 128, but the longer it stays above 121, that's the key range here. So we're gaining traction above 124. And the next chart. Again, this supports the broad dollar weakness story. This is a turn in the dollar, and maybe this is real. But one thing we do know, when we look at all of the dollars, are they all weaker? So this is Aussie. Yes, I mean Aussie's above this mid-Bollinger Band on the 4-hourly. So near term, it is stronger. So that supports the broad dollar weakness story, the broad dollar weakness narrative. Yes, absolutely. But the longer it stays lackluster, the more chance it might test that mid-Bollinger Band and break through it. This is something, if it does happen, all bets are off. And next chart, the final chart here is Kiwi. So yeah, again, the same playbook. It falls in line with the broad dollar weakness story. And just to be careful, just to be sure that you have to understand that obviously the mid-Bollinger Band, why is it important? Because if you look back, all the way back through March, through February, especially in March, you see it respecting it, and that's the thing I look for in charts. I just see, is it respecting it? Yes. Is it finding resistance? Yes. Is it finding support? Yes. Therefore, the level that I like, the market likes. That's it from me. My name's Patrick Reid. Watch that risk. We've got CPI. Let's see what happens.